Hi, everyone. Welcome to Analyze Your Trade, episode number 24 for February 20th, 2018. Tonight, we will be discussing your trade ideas. And over the last few days, we had about 40 people submit up to 5 symbols each. And I put together the list, which you should be seeing on your screen while I'm talking right now. We're going to get through as many of those as we can tonight. My name is David Kosmeter. I'm the creator of TimingResearch.com. And I developed this show with Dean Jenkins of FollowMeTrades.com, but he is off this week as moderator, and I have Matt Buckley of Top Gun Options here, and he is going to moderate tonight, so I'm going to go ahead and turn it over to him.
Awesome, David. Thanks again for having me. I appreciate it. We got two old timers here. Well, not in age, but in seniority. How about we'll call that? We have Jim Kenney of OptionProfessor.com and Mike Pisani of Alpha Shark. Good to be working with you guys again. Jim, we'll start with you. Why don't you give us a little bit of your background, how you got to where you are today, and what you do at OptionProfessor.com.
Sure. Well, OptionProfessor.com, we've been conducting educational meetings for decades now, and basically it's a firm that I provide the content for with regards to education on the different uses and risks of the options, and we go over everything from the income or cash flow producing strategies like covered writing and put writing and all the rest of them, credit spreads, and then we go into things like limited risk speculation, how to roll them, and calendar spreads, vertical spreads, whatever. And then, of course, another big part is hedging, where you use collars and married puts, which people have been listening, and then they use some of these tactics at the right time. Certainly avoided a lot of headaches in the last month or so. But yeah, that's what we do. We try to make sure you understand what you're doing, and then then you choose your weapon when you think it's the right time.
That's awesome, man. As you're talking, I was thinking of Emil Faber from Animal House with the statue, right? Knowledge is good. So that is exactly what you need in order to be a successful trader, especially in this market, which is getting a little crazy. So awesome. Welcome aboard, my friend. Yep. And then Mike, Alpha Shark, lay it on us and your background as well.
Thanks for having me on. Love being here with you guys again. So for me, I'm an options trader, but I don't necessarily trade options. I trade a lot of common off the option flow as well. So what I do is I watch the flow throughout the day, and I'll swing long options, but I like to really follow the flow, like Micron and Baba today, and like on Friday, and it tells me to go play these names, grab common, take it for a ride, and get out and scalp it. And you can make a lot of money scalping with common and not have the risk of options and get out of it quickly, and then look for those big winners to go with long-term swings on options. So I follow the flow all day long. It also tells me what the market is doing. If you actually really pay attention to the option flow, it gives you a great indication of what is going on in the market and how it feels sentiment-wise at that moment. And when when we were selling off a week and a half ago, and we got those little bounces in the morning, and then the option flow would suddenly stop, I would tell everybody in my service, be careful, look out. They're not buying anymore. They suddenly stop buying. That means the momentum is over for the day. So you can catch me at Alpha Shark or smartoptiontrading.com, and you can follow along with me, and I post this on Twitter every day, or you can follow me on optionsmike.twitter.
That's a great point, Mike. Is when things get quiet as far as flow, it's way too quiet. There's an ambush coming, so it's a great idea to watch flow. And sometimes you need a good Sherpa like Mike to be able to interpret that flow, because sometimes, folks, there's a lot of back in the day, not that I ever or any firm I would ever affiliate to with this. You can kind of throw some flow out there, but be masking other moves. And sometimes, I'll lure some of my traders in, we'll look at, some unusual call activity, and people ought to, well, that's obviously bullish. I'm like, you got to look deeper, because are those bought or sold, right? What percentage on the bid or the ask and all that type of stuff.
You just nailed it, Matt. I mean, most of the options are sold. If you look at all the flow and the amount of options every day, most of them are sold to open. They're selling covered calls. That's what they're doing, or they're selling premium. Mm-hmm. It's interpreting it.
Exactly, that's exactly right. So just don't look at flow. There's got to be deeper meaning underneath that. So that's good stuff. So Mike does some good work there. Folks, real quick, my name's Matthew Buckley. I jokingly always say that you guys can call me Whiz. That's a 10-drink minimum as to how I got that. Flew fighters for the Navy for about 15 years. Did some pretty cool things, getting to fly with the Blues, flew 44 combat sorties over Iraq, graduated from Top Gun, hence my really big marketing department at the time, Top Gun Options. But applied everything I was learning flying the fighter jet to trading, because when you think about it, trading is a form of combat. Even what Mike and I were just talking about, when people kind of mask flow, it's strategery. So at the end of the day, trading is a form of combat, and popped up on the radar of one of the largest vol arb firms in the country, Peak Six Investments up there in the Board of Trade. Did my time as Valentine up there, and eventually was the founder and CEO of the Options News Network, ONN.TV. Great time doing the Options News Network, and then moved my my squadron down here to South Florida. So all right, so we got the symbols.
I love the teal shirts, man.
You like those? I'd kick my own ass if I saw me wearing that. And I did. All right, so let's kick off. Jim, you can lead us off, and then Mike, and then I'll bat cleanup, because I get to say you guys are both right or both wrong. So I love that. So let's go with Boeing and what your take on Boeing is, Jim.
Well, my take is that it's been going through the roof, which is everyone's take, and the company's making tremendous amounts of money. So those are my first two takes on it. The only problem I have with Boeing up here is really the same problem I had with a lot of stocks and the S&P up at 2,900 or that area. Is that when you get this far away from the 200-day average, it doesn't take much to yell timber. We just saw it in Walmart. Walmart was about 20% above its 200-day. And this thing here is, let me see here, just to do the math. It's about 40% above its 200-day. And I know they're going to spend a lot of money on defense, and there's no end in sight. And, this thing's been like coining money. But as far as I'm concerned, if you're in it, great. And if you're in it, you want to collar it, wouldn't be a tremendously terrible idea. But, that 361 hadn't been taken out. So I would say right now it's obviously something that I would be looking to hedge or wait for some kind of a pullback. 40% above the 200 days, a little rich for me.
Yeah, that's a little overextended. Almost looks like a triple or a 2.5 top. How about that? Not a triple top, like you said, around that 355-ish. Real quick, Jim, can you explain what collared means for folks that are relatively new to options?
Yeah, basically you're going to be looking at the out-of-the-money call, and you're going to determine whether you want a short-term, intermediate, or long-term cash flow on it. And you're going to try to pick a price you don't think it's going to reach, and then you're going to take a premium in. And since this market's been going nuts on the upside, I'd assume the calls are going for a pretty good premium. I'd have to price them out. And then I take that premium, and then I go buy a put underneath the mark. So I've boxed in the equity, so I don't find out that the stock jumps down to 300, and I've lost a lot of my gain. So by selling an out-of-the-money call, you're going to be capping your upside at the strike price, and you're going to take that premium and you're going to put a floor underneath your value, and then you're going to go to bed and you're going to play for the difference between those two strikes.
Perfect. And folks, if you do that right, and he brings up a great point, especially with volatility. When vol is expensive, you sell it. When it's cheap, you buy it. With vol, expensive right now and richly priced options, you could almost do what's called a costless collar. So you can sell that upside call and potentially pay for, and maybe even make a little scratch on it on your downside protection. So it's a great tactic for something like Boeing that's probably a little over its ski tips. I agree with you, my friend. Mike, what are you looking at for Boeing?
I'm going different than you guys. So I'm going to lay it out there.
There we go.
This is one of the chosen names right now. There are these honey badger stocks out there right now, like this, like Amazon, like Netflix, like EA, that are defying gravity. When the market corrected 12%, this thing held the 21-day. They want this name. They're buying calls out to 400 and 450 on this into September, like nonstop. And you and I talked about that these were bought. I spend a lot of time looking at these, making sure when I call something out like that, that they're actually bought and not sold. And when I see something way of the money like that, I want to look very carefully, right? You want it. To me, I was trying to buy this morning in that first 5-minute candle. I couldn't get in. It moved $5 in the first 5 minutes, and I couldn't get into it on the open. I think that it's only a matter of time before this takes out this 360 area and goes higher, as long as the market holds. And I think we need to have this discussion here a little bit. When we talk tonight, the market has to hold this area. If we're going to go down and go retest lows or close to it and form a W pattern on the SPY or the Qs, this all goes out the window. Does that make sense? But if if this market doesn't sell and we hold this area for the next couple of days, go sideways and do sector rotation, which is what we were doing today, I think it's only a matter of a week or so before this takes out that 360 area and goes nuts.
There's no evidence of the thing breaking. I didn't say that at all, but I did say that I probably feel more comfortable if I bracketed my equity just in case we do give up this 2750 area and do go down. This might be one of the casualties because it's so far overbought. But there's no evidence of price evidence of this thing going down right now.
I hear you, Jim, but again, I look at this and look at the dip last week. We couldn't even get to the 50-day on this thing.
No, this is strong. This is a strong company. This is a strong company. Yeah, and look at that budget. That budget is more money for them, right?
Right, and the CEO came out and said he said, I see no reason why this doesn't hit 400. Right, we have orders, we have everything going on in this company. This company's. I mean, look at this run. You look at the move from this thing. It went from 180 to 360 in a year. It's overextended and nobody cares. And it's like NVIDIA. There's these stocks we're going to look at tonight that are just flying in their own world, and I keep telling everybody, if you want to trade, watch these stocks. Because if these don't sell off and the market's pulling, you have nothing to worry about. I'll leave it at that.
I mean, this is an indicator that the market is just having a pullback.
Yep. Matt? We lost Matt.
Sorry, I'm talking to myself. Great conversation. So, whoops. As I go back in time here.
Nice screen.
Couldn't agree more with what you guys just said, and I think Jim had the secret gem right there is the defense budget. I mean, if this thing ran for a year like this under Obama and sequestration and stuff like that, I got to tell you, the Air Force had a couple months ago like 214% increase in foreign military sales. I mean, this is obviously Boeing is military and civilian. Duh, we've all flown on 777s or whatever and stuff like that. But this is very, very strong. But I agree with both you guys that it's a little overextended. But like Mike said, who cares? I flew a Boeing product for 15 years. Well, it was McDonnell Douglas. And, well, there's an example. Boeing bought McDonnell Douglas. The Hornet is a Boeing product. But I'm gonna shift fire here, as I kind of do, to something I'd rather be in, which is a Raytheon. So, and here's why: a Boeing, an Airbus, a Lockheed, General Dynamics, and Northrop Grumman, easy for me to say. They're one deal away from Qatar Airways, canceled all their orders or something like that. I like Raytheon because it's in Boeing. Raytheon is in a ship. It's in a submarine. It's the instruments in everything. I sat behind an APG-65 radar that explains a lot of shit that's wrong with me, but behind a Raytheon product. So I like Boeing, but if you think, and obviously this has almost had this Boeing rip your face off rally. If you look at, just take a look at Boeing or Raytheon. I don't think you can go wrong with either one of these, whether it's a Boeing or a Raytheon. But I'm not in Boeing, even though I flew the damn thing. I'm in a Raytheon just because everything behind in that plane was a Raytheon product. So I like Raytheon over Boeing, but I don't think you go wrong. But this thing does need to take a little bit of a breather here. Okay, man, let's go with let's do AMAT. Jim, how you looking as far as AMAT?
Yeah, I was just saying on Raytheon, you're only about 15% or so above the moving averages. So obviously, from a value standpoint, you're getting a little bit closer to land.
Correct. I agree.
So anyway, yeah, it would be more. You would think it might be a little bit more stable if it pulled back. Anyway, Applied Materials, a big move today. So obviously you can't fight the tape. It looks like it wants to go higher. And let's just see how it looks on its 200-day versus the current price, because it had to pull back toward it. And just give me a second here to look that up real quick here.
Jim, I don't think you're sharing your screen. Buddy.
Yeah, if you're trying to share, we might not be seeing it.
No, I'm.
Okay, that's right.
Okay. Yeah. 49. Yeah. So it's not that far. It's not that far away from its average. It's not in a big over. Actually, they had the correction to 45, which was perfect for where it to stop. It was the former highs of last year, pretty much, right? And so it came right down to the 45 level, and now it's on its way back up. And it looks like it wants to take out 60.
Do you like an AMAT, or is there anybody else in that kind of chip techie space that you like more than AMAT?
No, I think this looks like a pretty good one because it had its correction to 45, so you know where your line in the sand is. And then with today's action in the overnight, it looks like it's gaining some momentum, so there might be news coming out on this thing for all we know.
So that's a good segue over to Mike. Any unusual flow that you're seeing in AMAT?
Tons of flow into AMAT since they had earnings last week. Right, okay. Earnings was 4 days ago, and it was flat overnight and took off from there. So let's take a little bit of history lesson here. We talked about AMAT about a month ago, and when it was still in that blue wedge I have there, and we all liked it. And said if it breaks, we take it, and I did. I took the March 60s, made a ton of money on them, sold them up into these double top up here, and kept 2. And then instead of being smart, which I usually am, and said if it gets to break even on the last 2 I have, I'll get out. I held them through this whole crap, and that's where I say I'm a dumbass. Right, but it was only 2, wasn't big.
Sure.
And I added back into them yesterday, so now I have a whole bunch more, and I think 58 is the area. It needs to break 58. I like this stock. I love it. Tons of flow. In fact, today they rolled up from the 5250s to the 5750s on the March calls. And you could, it was evident. They closed and opened at the same time. And what I loved about it is they didn't take money off the table, right? So they laid the same amount of wood down that they had. They didn't take money and say I'm taking profits. Whoever that player was, and we're not talking a few, we're talking like 5,000 of them. Laid them all out there, but it has to clear 58. If it can't clear and hold 58 in the close, this thing is going to continue to struggle. And I like this stock, but it has to take 58.
I like that. I agree with that. Let me share my screen here and make sure I'm talking. I agree. I'm not a super AMAT guy. I defer to you guys on that. It just kind of, you're right. This 57.5, 58, man, this has kind of been dead money for a while. Obviously riding through that was, put a little gray hair on your head, but it got right back to, we're almost at pre-implosion levels here. I like it. I'm not super into the space here. Whenever we're talking about something like this, I always defer back to this because it's most likely going to eat one of them soon, which is an Amazon. My TGO Top Gun Options website is Amazon Web Services, and I think it's only a matter of time. I got some booger eater friends out there in the Bay Area in these chip type of companies, and they have seen some recent people in suits type of thing, or actually probably cardigans from the Death Star. I would think that an AMAT or somebody, especially at what was it, $58 you said, is looking right for the pickings. I rarely do this, but this might be buy some deep in the money 80 Delta calls out to maybe, I don't know, 6 months or something like that, and sit on them and wait, because this might be a takeover target, in my opinion.
Great point, by the way, Matt. I mean, they are cheap enough in the chip space to be bought out.
That's exactly right. That's kind of what I'm maybe hearing. So, okay. Top of the order, Jim, what are you thinking about the other Death Star in the financial world, Goldman?
Yeah, I thought a lot of it back in the 230, 240 area at the end of the year, and we had that nice big run to 270. That washout to 240 looks like it might have been another gift at 240. If we're going to have the big takeovers, and we're going to have the mergers and acquisitions, and we're going to have a lot of corporate financing, et cetera, these are the guys who they go through, and they even have a big convention down in San Diego every year on leveraged lending. And so if leverage lending is going to take off because of all the repat money, et cetera, this is the guy you want to be in. And it could print above 300 if that all comes to pass. Now, your line in the sand right now looks pretty good at around 240. So there's your parameters. And again, this company is the one that would be benefiting from a lot of leverage lending if that's the way this whole economy is going to go.
I mean, hell, it was a couple of weeks ago, Goldman Sachs announced that they're financing iPhone 10s. that was pretty funny. How'd you afford that iPhone 10? Goldman Sachs. Mike, what are you thinking about the Death Star, the financial Death Star?
All right. You and I have gone around this one how many times now, Matt?
Can't stand them, but go ahead.
I know. You and I keep going here. And I'm usually the one going, I like it. And I've been right so far.
Yep.
I'm winning this debate, and I don't mean it from that. Well, it's just I've been right through the course of the last 4 months with this.
I've been righter because I like J.P. Morgan or Morgan Stanley.
And I agree.
I'll let you go. Go ahead.
So my first point is that this is lagging the good names in the sector, and you just nailed it. J.P. Morgan and Bank of America are the leaders in this space.
There we go.
Wells Fargo got the living, what kicked out of them because of everything going on there, and I like them a lot too, and I know you did. Mm-hmm. But this is a laggard that spent most of last year consolidating. When everything else was making new all-time highs, this couldn't make it. Now, I did have a nice trade on it. I made a little bit of money. I got really red. I bought into the dip. It went further down. I had to add to it, got even, got up on profits, and I took my profits and got out. I do think this could be a catch-up play in this space, but honestly, when I look at the option flow, JP Morgan, Bank of America, Citigroup, I'd rather have all three of these over this one. The only thing I like about JP Morgan from an options player, it moves like a beta name. It has range where some of those other names don't. So better with options than the other names. I'll leave it at that.
My man. I'll take that as a 50 delta. Whiz was right. No, Mike's right, guys. It's Goldman Sachs a year, in October, November, massive trades we placed at TGO, bullish on Goldman Sachs as the Death Star. And then Mike and I joked about Lloyd Blankfein trolling Trump on Twitter and a bunch of other stuff as his fixed income currency commodity divisions have been zero profitability. So again, to use the Olympic analogy, JP Morgan's my gold, Morgan Stanley's my silver, and then I'll agree with Mike there as a Bank of America. Wells Fargo's dead money. They're Fredo to me. They're a bunch of they're criminals, literally. The old CEO should be in jail, and 5,000 of their employees should be in jail, creating fake accounts, identity fraud. But since it's white collar crime, nothing happens. Wells Fargo sucks, so they're not even close to being in my Olympic medal round. Goldman Sachs used to be, man. It was good. These guys would print money. They'd be telling you one thing and taking the other side of the trade. I mean, they were
Tesla.
Yeah, there you go. Rocket Man. So I don't like Goldman Sachs here. This is not a good looking chart. Kind of almost a double top here. But again, in 2018. It's going to be the year for the financials, in my opinion. Goldman Sachs is not going to be super left out. I just, to Mike's point, I just like I like Jamie Dimon a hell of a lot better. I think he's a better skipper, and that is a much better looking chart than the JP Morgan. And then, my silver medalist it's not super dead money. I just like the JP Morgan, so I'll leave it at that.
But to your point, Matt, you just said it right, and Jim's tagging here. I think you're right. If you don't believe this market's going to sell off any more than it has, and what I mean by that is the low is in for this correction, right? And I personally am in that mode that I think we may drop some more, but I think the low of the 200-day on the SPY is it. Buy the banks.
Yeah.
Pick the ones you like and buy it, and just hold it. And don't trade it. Just hold it. Buy the common and just look away.
Yeah. Anything else on the financials there, Jim?
I think Goldman Sachs is a little bit separate from the other banks that you mentioned, because I think the way they make a lot of money is through that leverage lending and through a lot of that bringing stuff to market. And I think that their business is ahead of them if the Mnuchins and Cohns are doing their job down there.
That's not a point to be forgotten there, guys. Goldman Sachs is still Goldman Sachs. They're still a private equity firm, in my opinion. They're bringing they making the deals.
Right.
So with this tax, with the whole Trump tax, and everybody making $1 quadrillion, it's a buying season. So it might actually, and dare I say this, it might if that picks up. It might even leave a JP Morgan or a Morgan Stanley in the dust. So that's a great point, Jim.
Yeah, I think that when their revenues take off because that business takes off, if that business takes off, then they're going to be saying goodbye to the other banks, because the other banks are not quite the player that they are, I don't think, in this.
Nailed it.
Could I bring up another topic here?
Yeah, go ahead.
We touched on this earlier, Matt, and Jim, I'd like your opinion. We've been talking about how bonds are selling off, yields are going up, and gold is getting destroyed. Nothing makes sense in this market. If the Fed's going to raise rates, and I believe the Feds are in a corner now, right? They have to start unwinding more and more of this buyout, and they have to raise rates. They can only be good for banks, all of them. Mm-hmm. Pick one. Which one's going to suffer from that?
Don't disagree. Or Jim, maybe you could take. I just say Wells Fargo, but Jim, what do you think
Wells
about that
Fargo's
gold trade?
in the penalty box, right? The Fed put the penalty box on them. They can't even do anything right now.
Yeah, I was listening to the guy from The Big Short on CNBC about a year ago, and he said, "I'm buying every single bank I can find, as many shares as I can buy." So he was pretty adamant that the banks were the place to go, and that was when Citi was trading at 50, 60 or something like that, or more like 40, 50, something like that. Yeah.
Yeah, I don't think you can go wrong, obviously, unless it is a Wells Fargo. Go ahead, Jim.
No, he was just really keen. He was real keen on Citi. He was real keen on Citi.
And they're the one that's been struggling, right? I love Citi, but they got that downgrade about 3 months ago, and since then they haven't been quite the same.
Yeah, they also had a huge run.
They did.
True.
But Bank of America, man, they buy calls on that thing every freaking day.
That's a huge options behemoth is Bank of America. Yeah, it's kind of known for that too in the options space.
I saw the June 39s getting swept up today.
Oh my God, man! It might be in a nuclear war by then.
I was like, all right, 39s. That's a huge run for a bank.
Wow.
JP Morgan last week they were taking the 130s for March.
$15. Jeez, man,
That's a big move for a bank.
That is a big. What's a 10% move?
That's a huge
in
move
a month. That is a big. Well, I'm liking my bullish JP Morgan trades even more now. All right, let's move on to NVIDIA, Jim. Kind of in the AMAT space there. What's your take on that?
I would take them and Boeing, and I'd get them married because they're both very, very strong, and they don't pull back very much, and they both are about 40% above their 200-day. So whatever you said about Boeing, you just say about this, because although they're in different industries, it technically, I think it's in the same identical boat.
No disagreements. Mike, what are you seeing in the options flow, or what do you like or not like NVIDIA?
So, this morning was very evident on the flow right off the get-go that the semis were where they were rotating to, semis and software. We saw it in Micron. We saw it flow into NVIDIA, Intel, AMD, AMAT. They came across the board, and then they came into these little-known semi names all over the place. So what was driving that today? And if you have to look at what's going on. What was really up this morning? Bitcoin. Guess what?
Oh, man, now I got to do a shot. Remember, every time
do a shot. We're all doing a shot. But I don't trade the cryptos. I trade around them, but I don't trade the cryptocurrencies themselves. But if crypto is going to be strong, all the miners come back in. So what happens to all these stocks? They start going back up because they're buying more and more of their GPUs. And NVIDIA is just light and day above everybody else. They are the best in breed right now, and new all-time high today. So if you get a dip to the 8-day and the market's not selling off, you buy this thing, and you say thank you so much for giving me that dip, because I don't think you're going to get it here unless the market pulls, and the market could, but right now futures are up.
That's the whole crypto thing. Again, I like the underlying technology, the blockchain. So you're saying like an NVIDIA would be a way to trade the underlying, not necessarily get caught up in the Bitcoin mania.
All these miners are using the GPUs from NVIDIA and from AMD and even some of the other ones. So that's exactly it. You don't want to cut up in that blockchain stuff with OSTK and XNet and Kodak and some of these other names and Riot. It's these GPUs. This is what they're using to mine the Bitcoins and the other cryptocurrencies.
Yeah, it takes a hell of a lot of power and memory and all that type of stuff to mine it. So not a bad thing.
The rumor is NVIDIA, the new graphics cards they're coming out with, they're only going to make them 4 gig for the retail users, so that the crypto miners have to pay more to get the memory they need, because they need more than 4 gigs. So they're going to have to pay a premium to get the big cards.
Okay.
Smart.
Yeah, there you go. Feed mayonnaise to the tuna fish. There we go. That's the best idea I've heard. Okay, well, I'm going to punt on this one. Like I said, with AMAT, I'm not big in the space, so I like both of what you guys just said, and no disagreement there. Sweet. Let's move on to well, we kind of talked about it, but let's take a deeper dive. Jim, JP Morgan, folks want to hear about.
Yeah, like I say, it's very strong and looks very good. One thing about a lot of the markets, though, are we going to get a correction in the general market or not? Because if we do, obviously, I think there's vulnerability in some of these names, and this would be one of them. The VIX is something that I'm watching quite a bit because it refused to get underneath 11 very much, and then we had that spike up to 50. And then after that spike up to 50, it's come back down, and it doesn't seem to want to get under 15. So if we don't get under 15 and it starts going the other way, and we don't get above 2770, 2760 on the S&P, then the possibility for another drop down would occur. And a lot of these things we're looking at, they could have a correction. But you start getting above 2770 and this VIX gets under 15, then I think the fever's broke, and I think the likelihood that we're going to keep going makes a lot more sense.
It's a good point. I mean, I think if we do have one of those, there's a lot of the technical analysis folks out there. We've gotten 65% back of what we quote lost, and there's a lot of technical analysis out there that say, hey, we retest. We tend to retest lows before we, hit new highs and all that type of stuff. So you're right, Jim. I think that nothing would be immune, so to speak, if we retest and head back down to like a 200-day moving average. But I think, like we've all talked about, in a bad, I think the financials would be the best house in a bad neighborhood if we do retest one of those things. And we also, speaking about interest rates and the Fed, we also, during Jerome Powell's kind of ceremonial swearing in last week, that's why we had one of those rip your face off rallies one of those days. I forget which day it was. He said something about, we'll remain vigilant to any market put. Essentially, they called it what? The Powell put. So do we have a put underneath this market if we are going to retest it? But Mike, what do you think about specifically JPM there?
Again, I'm going to come from this from a little bit different mode, which kind of makes the show great. When we sold off, the S&P hit the 200-day, right?
Yeah.
Mm-hmm.
The banks, look at JP Morgan, it hit the 50-day. The banks did not sell off to the 200-day. The banks held in strong. They showed relative strength. We have catalysts for the banks moving forward. So I agree. If you want to talk general market, right now, we can start talking the W formation on the SPY, right? We can go into all these places. And for me, the VIX, I keep an eye on it, but it's not showing me any concern. When the market started selling off today, it didn't really spike much. It was kind of just there today. It's staying frustratingly high, but I don't care about it right now as long as it does nothing, because that move to 50 was artificial.
Yeah, I was at short vol, a lot of short vol people getting steamrolled over. All the people running out there to pick up dimes finally got run over.
They got done over. And I came out and said that night, we were here on the show that night, and I said, if you look at 50 is historically the high the VIX goes to without an event, meaning a financial crisis, or you got to look back at the big events, right?
Sure.
And we had no event here. So I'm not really worried about the VIX. I do think we could sell, Jim, to your point, I think we could sell back off. I think we can go down and put in a higher low just above the 200-day, right?
Mm-hmm.
But the banks to me are strong. So if I was to take a shot, I would take a shot on a JP Morgan here, but I'd buy June options. I wouldn't buy anything front month. Buy time and buy with the ability to add to this, or buy just common and say, I'm willing to hold because I know it's going to come back. Because one thing the banks are showing us here, and JP Morgan specifically, is they're going to come back. They're the first place they're going to, other than steel. Well, which is not on this list, by the way, which is just amazing to me.
Yeah. Well, and it's interesting. I think you nailed it, man, because it really would be, the financials will be the best house in a bad neighborhood. Capital is going to go somewhere. We all know, and we've all preached probably to our members and everything like that, that this, this ain't I'm buddy with Rick, Rick Santelli. This ain't no interest rates or bonds that was not this pullback. This was, as I preached, every pullback in 2017 was political. The Comey memo, the Obamacare failure to repeal, the fire and fury. There was not one fundamental, the Fed said this, earnings sucked, something pullback. This was a market pullback. This was $8 billion of short volatility folks running around with their capes, picking up dimes in front of the steamroller. And they got steamrolled. So this was an orderly sell-off. There wasn't no panic. There wasn't no it doesn't look pretty. I mean, if somebody landed from Mars, they'd say, "Oh my God, that's awful." No, it wasn't. And everybody kind of, I'm sure Jim and Mike probably were doing the same thing. We're just sitting here going, okay, well, somebody's going to sound the all clear, because this is not a fundamental pullback. GDP is good. Unemployment numbers are solid. That earnings, you could say earnings suck, but earnings sucked because they were good or going to be good. JP Morgan didn't necessarily, they bought on the earnings here. JP Morgan had horrible earnings, but it was because Jamie Dimon, everybody pulled forward all the crap into this period. And so I couldn't agree more. I'm going to stop mumbling here.
Let's hijack this conversation for a minute, and let's all get involved in this. I put up a chart here of the SPX. You just nailed this for me, Matt, and Jim, jump in here. This sell-off, as vicious as it was so long overdue, it wasn't funny.
Sure.
Right? And look at the bounce we had off of this at this point.
It was a Colonel Jessup. You want a sell-off, you need a sell-off.
Sell-off. That's exactly it, right? Yeah. I mean, so Jim, pile in here. There was nothing bad about this. This was a natural. We were so overbought. We had run so far, and I want to point this out. Look at this chart. The SPX. It told you, be careful. We had this huge move. We had an inside day. Then we gapped down to below the 8-day, never retook it. For 3 sessions, it was telling you, clean up your positions, clean up your positions. And I kept telling everybody in my service, careful, careful. Doesn't mean get short. Just means pay attention. Markets usually give you warnings unless there's an event. And they gave it to us.
Sure.
Yeah, well, 400 points above the 200-day moving average, and then a 700-point down on a Friday would be about as much of a warning as you'd need. But when you fly planes, when you're that far off the ground and your plane loses 700 feet in a minute, you better do something to stabilize the aircraft, right?
But it's a great thing. But it was telling you for 3 sessions before that.
Yeah.
Don't be dumb.
But I mean, like I say, just that distance between the moving average and the price is I mean, that Walmart today, I mean, the darn thing was 20% above its moving average.
Walmart screwed up. I mean, earnings, their guidance was horrible.
It's always going to be something, though.
If been good, it would have been. I don't know if it would have sold off today.
Yeah.
But to your point, it was
it's always something that brings it down,
Yeah, but I mean, it was always something. But I mean, I look at that and say, okay. But I look at this and I say, you're absolutely right. I mean, it's an ETF. There's no earnings.
Yeah,
this is a huge difference.
Yeah, I was talking about that whole January, man. To use an aviation term, it was hypoxic. We were just running out of oxygen, out of airspeed, and oxygen is not the way you want to live. But this was an awesome pullback because everybody expected it and everybody knew it was coming, and we didn't know. Nobody knew. Well, we talked about, or at least I talked about, you guys probably did too. I'm like, those shortfall guys, man, it's a great trade until it ain't. So, I get that a broken clock's right twice a day, but I'm pretty sure we all sat here and said, man, those shortfall, God bless them for making a little bit of scratch all along, but they're going to get wiped. That's what did this. So that pullback was expected. It was kind of foreseen. And then once all those short vol people unwound their short vol and got long vol, you used to work in Chicago. Whiz, you used to work in Chicago, so when there's 9 million people who have to get out, the guy on the other side of the trade is not going to be Santa Claus, right? No, they're not going to be nice. Exactly. They ain't a charity.
So when we look at bonds now, guys, I'm going to continue to hijack this conversation, and you can always shut me down.
I love it. Go ahead.
I think we're about to see the same thing in bonds. Maybe not as fast, but a very rapid move in bonds. Look at TBT.
Oh, I agree with you 100%. You're saying that we're at about 3% on the 10-year, and the 200-day moving average is 2.3. That's 30% above its 200-day. The gap between the 200-day and the current yield on the 10-year is just. That's why I think the stock market could get vulnerable, because if it got vulnerable, that would be a reason why the bonds would rally.
But I actually think the opposite. I think the rates are. The yields are going to rise, Jim. I think we're about.
You don't think they're going to close the gap at all between the 230 and the 3 points we're at now at all?
I'm actually thinking we're about to see one of these massive unwinds, like we saw in the volatility.
Okay.
And I'm not saying
we get above 3, and then everybody's got to get out of that. Out of that.
You got it. You understand what I'm saying? I'm not.
Yeah.
I think.
No.
that we are on the precipice of it here, and you need to be aware of it.
Strangle it, strangle it. That's what I say. Strangle it.
Yeah,
Right, Whiz?
That's not a bad trade. I fully support that, and for all the reasons we were talking about the SPX. So yeah, I think you nailed it, man. There's a potential good solid trade in there. Absolutely.
I think you guys, if you're trading, you need to watch this, because if this starts to go, the market's not going to react well.
Yeah, that's one of the canaries in the coal mines that, one of the instruments in your trading cockpit you should always kind of be looking at. That's a great point, man. Good.
I think the way you get the thing to listen, Wiz, I think the way you get that to jam up is just somebody has to start saying the Fed is behind the curve.
They are.
They are. Yeah, they are. But I mean, if people start believing they are, then they're really going to get out of those bonds. And, talk about a crowded trade. How many trillions of dollars are out there at either a negative yield or 1% yield? When those people want to get out of the movie theater, it's not going to be pretty.
That is going to be a ugly stampede.
But the funny thing, all this money pouring out of bonds, where's it going to go? I keep saying dividend stocks.
T-bills at 2%.
Yeah. It might be utilities or something like that, but no, I couldn't agree more. This is a dangerous trade, and getting out of it is going to be even. Yeah, that's when you can drive a truck through the bid ask. All right, let's go with Jim. What are you thinking? So another financial stock, Citi.
Yeah, like I was saying, Citi was a big deal back there before it ran up so high, and now some of the news is not as good as it was. So, again, like a lot of things that are in a little bit of an overbought condition, it can bounce around on you a little bit. Let me just see it real quick here and see what I can see here. Well, anyway, I think Citi is the same situation as JP Morgan and the other banks, in that they've had a very good run. Nobody really wants to sell them because nobody wants to be out of these things when that, rates go higher and their profits go through the roof. So it's remember how people used to say nobody will ever sell Bitcoin because they're in there for the long haul, or they won't sell something, because, oh no, I'm sorry, not Bitcoin, Tesla. You can't get sellers in Tesla because they're so committed to that guy that he could lose money for 10 years and they'll still be with him. Well, that's the way people feel about the banks right now. They're just not willing to get rid of those positions, and that's the way they feel about Boeing as well. So it's in that kind of a group.
True. Mike.
I kind of feel the same about the other ones. It's not leading like JP Morgan and Bank of America.
Yeah.
It broke this long-term uptrend and is struggling to rehold it. But ultimately, I believe that it's a good name to be in, and the banks are a good place to be for the long term. So whether you buy it here or buy it if you can get it a little cheaper, I think it's a strong buy moving forward. I don't want to waste much more time in the banks.
Yeah, I'm with you on that one. I gave you my Olympic, JP Morgan, Morgan Stanley, and Bank of America. Citi just ain't in my top three of the financial. So let's press to the real Death Star, Amazon. Jim, what are you thinking about Amazon?
Okay, give me a second here because I was having a little computer issue, but I'm not any longer. Yeah, again, you guys were mentioning it earlier. There are some stocks that people want in, they don't want to get out, and they will not get rid of, despite them going down. And Amazon's one of them. So, as far as Amazon, Boeing, the banks, these are the core holdings of people that are bullish, and the long-term trend on stocks is still up. So they're not going to get rid of this thing anytime soon for any length of time. It doesn't look like.
And they also, this dip, quote unquote, was used as what? A buying opportunity in Amazon. I mean, this was a buy the dip in Amazon. Mike, what did you see as far as option, or what are you seeing as far as options activity?
The problem with Amazon is the options have gotten ridiculously priced because of the volatility in the name. Yep. These things are trading at a huge premium, but the thing is moving $30 to $60 a day.
Correct.
Yep. I haven't traded it now in a month. And I have it actually off. I have my side screen where I have about 20 charts, and it's not on there right now. All-time highs. If you want to trade this, go ahead. I just don't want to pay the premium because if it falls, you're going to pay the price.
And again, it's 40% or better or something like that above the 200-day average. So it's in the same boat with Boeing and the other guys that are going through the roof of the NVIDIAs. So, if these trains won't stop, you'll be having a good time. If there's any kind of disruption, there's going to be vulnerability.
And you just nailed it. I think it's going higher. I see no reason it's going to stop. I'm just not willing to pay the option premium to play with it.
I dumped back in October. I did a webinar and I added a couple Fredos, man. I said, I'm done. Apple, I'm done with. And then Facebook, we bailed out of too. When you see headlines like this, like, why was Facebook so easy to hijack? And then this guy who, what was it, a month and a half or 2 months ago, publicly said, I don't care about profitability. I want to do good. I'm like, if I was a shareholder, I'd be calling my attorney to sue you right now. You have a fiduciary responsibility to me. You want to do good, dude? Take your company private. Other than that, I don't give a shit. That's my Gordon Gekko moment. So Facebook and Apple, I told all my members to dump. And even if you scrap it together, do one contract with a long call diagonal out to Jan 20. And people that did that are up, 10, 15, 20 grand in like since October, just printing money in this thing. I agree with you guys. If we get a systemic, and this was technically a correction, right? Did we get 10% on this thing?
We got 12.5.
So there you go, folks. That is technically a correction, even though if it was based on a lot of, short vol trades. Look at what this did in the quote correction. So traders, the options market is very efficient and smart, folks. So traders knew that this pullback was what? This wasn't something systemic, and Amazon is still going to print money. I mean, hell, we had some great days in here with Amazon. So I know, Mike, you said you're sitting on your hands. I've been just trading the hell out of front month, just bull put spreads on Amazon. It's been the gift that keeps on giving. And any pullback here, I think, is an opportunity to get in. Unless what I was going to get back to, if we don't have a short vol systemic type of pullback and we get something nuts. I don't know, Powell comes. We're raising interest at 5%. Something crazy. Amazon will go down with it. But until then, to Jim's point, this is a BTFD and a hold. So
and you know what? I agree with you, but you have to have a lot of resources to trade this right now.
Oh, that's what I'm saying.
In a small account, you do not even look at this. You just.
Well, no, that's why I said I did my little Facebook and Apple detours because in the FANGs, I said I'm done. Back in October, I'm like, I'm done with Facebook and the politics of it. I'm done with Apple. We all heard about the iPhone 10 warnings. I said, dump it.
Yeah, but that thing's back in vogue. But that thing is now, that thing went from hated to loved in one session.
Oh, what's that? Apple?
Apple. We should talk about that one. I mean, that one changed character on a dime.
Yeah. I'm still. There was a report today. What was it? The Chinese sales. Everybody's always pointed overseas to. Who cares if America's soft? It's a quadrillion Chinamen there, and I closed it. But there was a report today that a little bit of softness in because they can't afford it. The Chinese.
No, but it's what they announced, Matt. It's what they said last week. That's going to drive this stock.
I agree. It's not Facebook. To me, is dead money. Apple isn't. Apple I actually put on my hold. I said ditch Facebook and hold Apple. But what I'm getting at with the Facebook and Apple discussion is I'd get out of both those to cobble together a long position in Amazon. The dude is just taking over the world. You name the space. I guarantee you a year from now he's either bought a FedEx or UPS or he built his own. He's
building his own.
Talk about Jamie Dimon. What happened a couple weeks ago? That's what one of those pops was Jamie Dimon, him, and Warren Buffett. We're going to solve the healthcare issue. I mean, so the dude's in everything, and it's just it's the octopus. It's almost the Goldman Sachs Rolling Stone article, about them being the giant vampire squid.
But everyone we've heard this before from many other names, and eventually they all come crashing down. Apple had this moment before it crashed down. Now it's come back up, right?
Oh yeah, no, I remember Apple. What was it? Crashing through 100 and down at around 90. People, the death of Apple. It was greatly over exaggerated. I don't disagree. I just some of the new or the old market mantras I just don't apply to I mean, remember a couple of years ago, guys, that my E-Trade or Trade Monster screen didn't have PE on there. It didn't have that many decimal points. what was it, 3,000?
Yeah.
So
Yeah.
if you're a fundamental trader like my dad's stock market, you'd look at an Amazon and your face would melt off. But nobody cares. You know?
Well, I don't care about the fundamentals. I'm just saying that if the option price is through the roof,
Don't disagree.
And you need to play. If you're going to play, you need to play small and buy dips. 8-day, 21-day. Don't buy it here.
Yep. I got to be honest with you. I have no idea what this next thing is. What's Fred?
Fred? Come on. How do you not know Fred, man?
It's a retailer.
Fred owes me money. What? Jim, tell me what Fred is, because I'm clueless.
I don't know, but my screen says it's a mixed retailer. So that's what I know. But I do know what I'm looking at technically, and the volume on this on a 50-day basis, has been drying up a little bit, but the price has just collapsed. So I would, and the short interest is 33% of the stock. So got a pretty high short interest in there. I don't know anything about the company. If you buy it here, you're buying an option, which means it's either going to go to zero when they go belly up, or maybe they could do something. I saw this game with J.C. Penney do okay, but I could probably name other ones that it didn't do okay. So that's the game you're playing, though. Feast or famine, $3. Either do that or bet the Golden State Warriors tonight. Either one.
Man, you stole my thunder. That's my mantra. I don't trade options in any stock under $10. It's an option in and of itself. So yeah, if you'd like this thing, you buy the damn stock. But what are you seeing there, Flo, man?
Dude, I see no flow in this thing, and I'm with you guys. They bought the living crap out of Apron, Blue Apron calls on Friday, and I'm like, just buy the damn stock. They're buying $4 calls. Just buy the stock because the chances of working is minimal. This is another retail name. Retail's just been beaten up, and look at the fall in this thing.
Yeah,
I have seen no bottom yet in retail. I keep an eye on it because you know what? I'll be the first person to say if I saw a bottoming this, I'd be buying everything in it. I can't say I want to touch this thing with a 50-foot pole.
Yeah, there's three of us. We all agree on that one. Fred, you're dead to me. They should add an O on the end of that. Fredo. Look at that. We've done a Godfather reference. Shopify, Jim. What's your take on the e-commerce there?
Give me a second here. Not one that I'm following all the time, but basically, obviously, it's got strength in the aftermarket. I guess it's down $4, so it must have had some news that kind of reversed it a little bit in the night session. I'm showing it down there anyway, and like I say, the thing's been going through the roof. So you obviously are playing momentum, and the momentum is definitely carrying you here. But like many others, it's about 40% above its 200 days. So you're riding a wave. The wave keeps going. God bless you. And coming in here at this level, you need to have huevos rancheros, I guess.
It's a great point. I'm going to punt on this one. If you're talking e-commerce, I'd again go back to the Amazon Death Star. But Mike, what are you saying in this?
Software today was one of the software and semis were what was in vogue today, right? And I do think I do hope that we're seeing sector rotation for the rest of this week, where the indexes kind of just chill out and they rotate from sector to sector and let everything kind of catch up. That would be great.
Yeah.
This here, you're not initiating up here. If you're in it, you're moving your stop up to probably 127 area, 127.50, and you're seeing if you can, you can catch fire and this thing goes ballistic. But I would look at a dip towards the 8-day if it held it. But other than that, I'm not initiating up here. I'm not looking at it.
No.
To me personally, like I traded Micron today, 2,000 shares for 40-something cents, and got out. Left a little early, but you know what? You take your chances and get out. This to me is the same thing. If there was a lot of option flow that looked like it was a momentum flow, and this name doesn't normally catch it, I would trade it for a scalp with common. I don't think I would touch it otherwise.
Yeah, this is to use my hypoxic example. That's running out of airspeed and altitude, and I don't trade it. Like I said, if I see anything that's even closer related to what Amazon could get into, there's no barrier to entry in the e-commerce phase. It's almost like I'll do another shot at the Bitcoin thing. Once you realize there's going to be literally thousands of cryptocurrencies, it kind of loses airspeed there.
Can we pun on AMCN? It's a dollar stock.
Well, I have $1.
Yeah, there you go.
But that's Valentine. $1.
I mean, I have no opinion on this.
I don't get it. I'm not. What is it?
It says Air Media Advertising. So you're in Fort Lauderdale. Do you see any planes with anything off the tail? That might be them.
They go banners for a buck.
Those banners on the back of planes. That would be Air Media.
Air Whiz, man. Yeah, shit. I think my stock would be more than $1.07. So yeah,
why don't we talk about Apple here?
Yeah,
because Apple is a big name, and I think everybody would want to hear about that.
Yeah, let's do that. Let's wrap up with Jim. Let's take a bite of Apple, and then we'll wrap up.
Well, they tried to hit it, and they tried to say bad things about it, and like
me.
No, one of the hedge funds. This hedge fund guy who owns the New Zealand property, I just forgot his name, from Tiger Financial. He said bad mouthing Netflix is like bad mouthing Santa Claus. So I think bad mouthing Apple is about the same idea. But, it does have resistance up around the 180 here that it has not been able to take out. It's trying to make a recovery here. And I think it's going to be basically a victim of the market, in that if the market does not have a pullback and we start getting above that 2775 on the S&P, 2800, this thing will take off again. And if we do roll over, you got a gap under 170, and you could come back down into the 160, 165 area if we got another correction.
Okay. Yeah. Go ahead, Mike, and we'll all jump in.
All right. So I agree with a lot of what Jim said. First of all, if you look at this let us down, right? The selling of the Qs, Apple was the weak link until this reversal, and then we shot up, right? Until we got extended. So you look at the last candle we had on Friday, that topping candle. Look how far off the 8-day it was. This thing was extended beyond belief. So, Jim, to your point, it's got that gap down there. Mm-hmm. For me, if it's going to be bullish, the 8-day and everything coming together, it would hold this gap. It would, around the 50-day, and that would be the place we held, which is right around 170. It has what Tim Cook said. They're looking to go cash neutral, and you're saying, well, what does that mean to me? That means if they make $4.5 billion in profit, which, by the way, they routinely do every quarter.
That's crazy. That's
right.
Awesome.
Right.
They're going to reinvest that. They're going to put all that money into buybacks and dividends.
Yep.
Oh my God. Wow, that's great for the stock.
Yeah, that's exactly what you want.
We have no innovation, but we're going to put 12 to 15 billion dollars into the stock every year.
That's music to Carl Icahn's ears. He's been bitching about that for years.
So, to your point, this thing could come back and take that gap out, Jim. I don't disagree with you, but I think overall, this stock changed on that announcement, and they're going to want to be in it. And it's no longer this stock is no longer a play about growth. This is now a play about return on investment and dividends, and that changes the nature of the game.
I love it. Here, let me pull my chart out. Like I said, back in October, I went neutral on Apple, and then of course they announced that they're repatriating $1 quadrillion and paying $38 billion or 32, 38, a couple billion here and there, and hiring 20,000 people. That's some good stuff. So that's why I went from trashing it to saying, all right, I'd hold. We had Jan 19 and Jan 20. I think one synthetic stock, one long call diagonal position. So a healthy rebound here. Here. Oh, I did find the article. Let me bring this up because this was in the journal yesterday. And where is it? So why the iPhone is losing out to Chinese devices in Asia? Apple's market share is stagnant or declining in Asia. I'm not going to bore everybody with this, but Apple is sometimes a victim of its own success by notoriously sandbagging and then hitting it out of the park. So it ain't cheap over in Asia, and people from India to Indonesia are going with the Apple of China. I'm not going to bore you with charts here, but Apple's obviously in the red here. Flat. India, Indonesia, it's flat all over the place, and it's like I forget how you say it, Xiaomi or whatever. it's not dead money to me. It's not a Fredo. I just it's that's a 3-month chart here. This is just kind of stagnating here, and it's had this rip your face off rally. So I'm neutral on Apple. In 2 years, if you wanted to hop in your time machine and go out to to Jan 20 and buy some deep in the money 80.8 Delta calls and sit on them, you wouldn't be an idiot. Apple's going to be a $300 stock in a couple of years. Obviously, I don't know. Like I said, last time I'll say it, I'd cobble together my errant Facebook and Apple positions for an Amazon. But
what a difference when the buyback machine's on versus when it's not in this stock.
Yeah, that's a great point, folks. It can only it's math. The more shares they buy back, the less there are, the stock goes up. It's a great point.
And by the way, you got a great line in the sand at 150. I mean, that 150 area is a great line in the sand. You're only $20 away from it almost. So if you're going to be a long-term holder of it, I mean, this is not a bad place to take a bite and risk $20.
And did you guys see the article? The amount of buybacks announced for this year is already record pace in the first quarter.
And what's crazy, guys, is and not only just so the buybacks themselves are bullish, but what about on average, the math I've seen is on average an S&P 500 company will return an extra 8 to 10% earnings per share based on the tax law, and that's just using some Kentucky windage. People going, some good 500-pound brains approximating. What if it's better than that? So you're right. And Apple, I don't think you can go wrong, to be honest with you. Wow, I think that's a record for us, man. We got to lucky 13. So look at that, straight up, man. You'd think we do this for a living. So nice job, Jim and Mike. Jim, how do we track you down and find out what you do and follow what you do over at the Option Professor?
Yeah, just shoot an email over to optionprofessor@gmail.com. And if you have any questions or anything, we'll try to get to them at that point. And I want to thank everybody for being here. And this was a lot of fun. So hopefully we do it again real soon.
Yeah, Jim, good working with you again, my friend. And Pisani, what do you got?
Hey, you can catch me on Twitter at OptionsMike, and you can hit me an email at mike@smartoptiontrading.com. Guys, really had a good time tonight. Sorry I hijacked the conversation a couple times, but I love this show. I love the format, and I love just branching the conversation out.
No, I love it. Like I said, man, I always charge a glass of wine before this because it reminds me of my options cocktail days back at.
I was on Scotch, so.
And there you go. Well, there's the answer. Real quick, folks, if you want to hit me up at Top Gun Options, it's easy. TopGunOptions.com. Beginner, intermediate, advanced. You can take a quick 2-week test flight. And if you just want to watch my daily market videos, you can just go to our homepage and type in your email, and it's free. And it's called the SITREP, Situation Report. You can listen to my rant for 10 minutes each day, and the politics are free. So, David, on time, on target, my friend. I'm going to throw it back to you. Thanks for having me.
Yeah, thanks, guys. Great show. Just want to remind everyone watching to be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Also, be sure to join us next week. Crowd Forecast News was off this week because of the market holiday, but we'll be back next week, February 26th, Monday at 1 p.m. Eastern Time. And Matt, you are moderating that one too, right?
Yes, you got it, man.
And then also for this show next week, we are doing the experiment with a new time, 4:30 p.m. Eastern Time. So that'll be February 27th, Tuesday at 4:30 p.m. Eastern. So that'll be the episode 25 of Analyze Your Trade. So be sure to join us for that. You can always go to TimingResearch.com/live to get links to the live broadcasts. And just want to thank all my guests again for this week. Jim Kenney of OptionProfessor.com, Mike Pisani of AlphaShark.com, and Matt Buckley of TopGunOptions.com. Thanks, guys.
We'll see you. Thanks.
Thank you.